Testing, 1, 2, 3. All right. Good morning. Good morning. How is everybody today? My name is Lan Turner. We are here once again. We get a lot of new people. I've been looking at the stats lately of our YouTube stuff, and we get a lot of people coming and watching who don't ever register, who don't ever sign up, don't ever say, hey, I want to be a member. But we get lots of people coming back over and over and over. It tells me you guys keep coming back, but you don't hit that little button that subscribes. How come you don't subscribe? I don't know. Go ahead, subscribe. It's not scary. It doesn't hurt you. So go ahead and subscribe. It's nice to see everybody subscribe. We get a lot of new people too. A lot of returning people who aren't subscribers, but we get a lot of returning people who are new, or a lot of new people. So we get a lot of new people. So I feel like I should introduce myself every day, since we're kind of a growing channel, I guess. And new people come and want to see who I am. But you guys who come all the time, you already know who I am. My name is Lan Turner. I'm a former instructor at the Chicago Mercantile Exchange and the Board of Education's Education Center. That's who I am. And I teach classes at Utah Tech University. I teach finance. You know, something I don't talk about much. And I was thinking about that last night. I was going, you know what? I never mentioned some of my earlier work. When I first got started, I taught computer science classes at the U.S. Naval Headquarters in Washington, D.C. Did you guys know that? Did you guys know that I did that? I was teaching people how to use computers clear back in the early days when it was all about DOS. I taught computers. We had a contract. The company I worked for had a contract to teach educational courses to the U.S. Naval military leader guys, whatever you call them. I was never in the military. So, I mean, I worked there, but I didn't. What's going on here? Why are you drawing pictures, Lan? Mark's getting ready to run. We got seconds, 44 seconds, and it's already getting excited. I did. I taught classes in Washington, D.C. at the U.S. Navy headquarters in Washington, D.C. My classes were all these guys. I was just a young guy, just out of college. And there was all these guys coming in with all of their uniforms and because it was Navy, they were all in their white uniforms with all their medals and stuff and their coats, and they were all fancy dressed. And that's who I was teaching. Those guys were the ones in my class. It was a lot of fun. I've been teaching my whole life, I guess. Look at that market go. There goes the NASDAQ. Lan, why didn't you take that position right there, right out of the gate? Didn't we do that yesterday? Yeah, but yesterday was a dead market. Today, the market's alive. How did you know the market was going to be alive today and not dead? Because I know. Look at it. It's going. It's alive. This market's alive. Get in there. Fight, fight, fight. Win, win, win. It's scary. I got a good class for us today. I had a nice meeting yesterday. Hold on a second. I had a nice meeting yesterday with Bruce, and we had a good conversation. If you remember, oh look, flush, 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 flush. I told you, be careful. That market doesn't always go straight up. I told you. Yeah, but if you'd have got in there, you'd have been fast and you'd have made a lot of money. Yeah, you think so? That thing went up $87, and that's on the micro mini. How much have we gone up so far? We've gone right up to that blue light, $315. $315? What do you mean, Lan? That thing's gone up $315. How much did you have to invest to do that $315? Well, if you've been in class, you'd know that was only a $750 investment to make that $315 move. Why didn't you do it if you're so smart? Oh, I didn't say I was so smart. Didn't say I was that smart. What are you doing here then? I don't know. I'll just come and goof off with you guys. I got the one that they handed me the mouse and said, "You go do it." And I said, "Okay." We're having a good time here, aren't we? So yeah, I taught it in the U.S. Naval Headquarters in Washington D.C. for about, I guess those classes went for on and off for a period of about 2 years. So that was pretty cool. I worked there for about 5 years, and they had me teaching classes at the U.S. Navy headquarters. That was fun. I really enjoyed it. That was my first foray into teaching. I wanted to be a teacher. I took classes at the university to be a teacher. Never finished it. Never did go through. Look at the Dow. Dow wants to go. NASDAQ. Let's tag this thing. We're going to say that's the high. We're going to say that's the low. There's our boundary for the day. All right. If it breaks out of that boundary, we're going to be bullish on the day. If it breaks higher, lower, we got the high boundary here, got the low boundary here. What do you mean you never did finish your educational? Well, I didn't get my degree in education. That's all that means. Well, this thing's still coming down. Up here on the S&P. We had some good options yesterday. Those options we put on, and I told you I was going to put on, they paid off. We made some money on the options. Wasn't enough to cover our loss. What did we do yesterday? But man, did you see the power hour yesterday? Holy smokes. So there's what we did yesterday. Those options paid off. The options we put on in class sold calls to collect premium and bought calls to collect intrinsic value, both paid off. So that was $393.50. That was took 3 positions on the opening bell, lost all 3, got stopped out. Tried to take the Dow at the lagger against the other 3 markets, but it failed to drop like the others. We tried once with a single contract, got stopped out, tried taking the second attempt at a drop. This time we took 2 contracts that failed and stopped us out, which brought us up too much. And then we tried to take a long position on Cousin Russell going the other direction and just got no follow through, red on the morning. We put on some options. They paid off, but not enough to cover the day's trading losses. So lesson, tough morning, no follow through. Fed day, speaking at noon. And as one of our students said, as quiet as noontime on Christmas Eve. And it surely was. Dead as everyone wanted to see what the Fed had to say. It was dead. Everyone wanted to wait and see what the Fed said. And then, man, live in power hour, that thing went through the moon. Did you guys ride that thing up? I got a piece of it. I didn't get the whole thing. I pillared it up a little bit, so that was fun. All right, what's our news today? You guys looked at the news yet? We got a good class today. I was telling you, I talked to Bruce. That's not going to do us any good. Let's hold on a second. Where are we at? Oh, there it is. That's not going to do us any good either. What the heck is that? Grabbed the wrong window. Here, this is what you guys want to see. Retrace. Reload. 2. Today is Thursday. Today's Thursday? I thought today was Friday. Oh my goodness, it is Thursday. We still got class tomorrow. What are we going to... you know what I want to do tomorrow? I know what I want to do tomorrow. Tomorrow we're going to do stocks. We're going to put some stocks positions on. Maybe we can go look at the stock market today if we got time. I don't know. Bruce asked me to show him some stuff, and so we got a full schedule today. We got Fed Waller speaking this afternoon. We got Fed Casher speaking. We got Fed Cook speaking. We got Fed Harker speaking. Man, those guys are back on their kick again. 6:30, we had national activity. We got nothing that's really serious here. Initial jobless claims, those are usually pretty good. 215, actual 201, previous was 213, actual is 201. Oh, jobless claims went down. That's good. That's good news. 745, we got composite PMI, Purchasing Managers Index. The flash index says 745. So we got in 10 minutes, we got a news report coming out. So let's remind ourselves of that. Existing home sales comes out at 8 o'clock. That usually is pretty good. I'm surprised sometimes that some of these things aren't red. This is usually pretty good. Existing home sales coming out at 8 o'clock. So we got good stuff coming in here. 7:45, we got some news. 8 o'clock, we got some news. I kind of like the two impact news events because they make the market move, but not like, a red one. A red one makes the market go so hard and fast that sometimes you feel like you have to sit on your hands because the market goes so crazy. It's kind of like the opening bell. But these impact twos, they're generally pretty good because the market gets the news and then they just kind of trend out of it. They don't go crazy like the opening bell. So we got something happening here in a little more than 5 minutes, and then we got another one happening in around 20 minutes. So let's keep that in mind. Did you guys all go get your slides? I updated that again, got rid of some of the bugs that were in there, got rid of some of the duplicate slides. Again, this isn't like a book or anything. It's just all the slides that I create for this class. And so there's a whole bunch of stuff in there. I created some new slides in here. I got all this stuff down here on options for you. I put in here. I know this one's in there twice, but that's because it's in two different sections. This one's got a little higher resolution graphic. I grabbed that graphic and the other one was a little bit lower resolution. I don't know if you care about that kind of thing. I do. It kind of, bugs me. But yeah. So Pit News Magazine coming along nicely. You guys are going to be so excited about the March issue of Pit News Magazine. I can't wait to get it in your hands. Worked on it all day yesterday. We work hard on that Pit News Magazine, guys. It's a labor of love because we just love doing it. These markets aren't doing anything. They're waiting, aren't they? They're kind of sitting around waiting. That's our Dow. That's our signal right there to get long. We wanted to take it. I don't really trust it. We could take it though. We could take it with a single. See if it wants to go. I don't trust it. I don't know. We'll see. Sometimes you don't trust them and they go. This one here down here, this here Russell, the little cousin Russell down here, he wants to go. He broke out of that red line, that red break. Look at that right there. See that? He took that red first green candle to make a new high, and he's going up trying to break new highs right now. Right across it. Well, that's right where we were. Got a little white line there already. That's that previous high breaking across that magic blue line. Come on up there, Dow. Come on, Dow. Move for us, baby. Move for us. We need it to rally. I think this market's going to sit quiet. Everybody's sitting on their hands waiting for the news to come out. It ain't going to go nowhere. Look at that. Oh, man, it ain't going to go nowhere. Let's bring it up full screen. You guys can see it bigger. It ain't going nowhere. Where are you going to put your stop, Land? Well, if it breaks and no longer making higher highs, we'll just get out. Higher highs and higher lows makes an uptrend. Lower highs and lower lows makes a downtrend. So if it ain't making higher highs and higher lows, there's no reason to stay in there, right? Well, how big's that risk? Well, sometimes you got to risk something to make something. That risk is $100. So we're going to throw $100 on the table to see if that thing's going to go higher on our little signal right here. It's got to make higher highs and higher lows. If it doesn't make higher highs and higher lows, it's going to fail. And that's what Bruce and I talked about yesterday, and that's what we're going to talk about today. Failure. So Bruce has been working on his trading strategy, and he likes the fact that this market returns to that magic blue line, doesn't he? We all like the fact that thing looks at that magic blue line. Magic blue line? What is that magic blue line, man? I'm new here. That magic blue line is the VWAP, volume weighted average price. All right. And it kind of follows the market around. And it's not like it's flat. It doesn't just go straight across the market. If the market's going up, it'll go up. If the market's going down, it'll go down. It's kind of like it's kind of like your little brother. Get away from me. Go away. Quit following me around. But that's what it does. It kind of follows you around. And so the market has a tendency to come back and whack it. It likes to come back and play whack-a-mole with that blue line. It's a target. It likes to come back, hang out with little cousin, little brother once in a while, say hi, and then it takes off and uses it as an area of support or resistance. Sometimes it'll come down, it'll take off again, it'll go like this, or if it comes down and goes through it, it'll come down and go through it and use it as an area of resistance, like if it goes up here, right? So it'll use it as resistance, then fall again off of it like that. So there's different ways it plays off of this blue line, and you're going to have to just kind of watch and keep your eye on it. But look at that. That thing just totally failed on us. We thought maybe we're going to get a little ABC land, ABC, ABC. We thought that thing might go and break higher. But I think we're waiting for this news report to come out. And so now, who knows? It may fail and come back down to this magic blue line. But technically what we're going to expect, since this is a little triangle wedge formation, this is our next buy signal right here. If it breaks above that high and holds above that high right there, that would be your next buy signal. Is it your A1 buy signal land? No, it's not an A quality. It'd be kind of a B quality setup. But usually what we see is we'll see a nice, I'd like to have seen more bars up on this, but you see kind of a nice trend up and then a choppy trend down, and then you get another nice trend up. And that's kind of what happens. So we take that first one off, that first right there, because oftentimes that'll take off and just keep going. We'll give you the little pullback, right? That's our A. That's the one we generally like. But if that fails, when it comes back down, then oftentimes that's where we get that choppy accumulation. And then once it comes down here and starts to go, the first green candle to make a new high, if it comes down this far. Otherwise, we wait for it to break above. But it's breaking out the bottom of this triangle. So we'll look for it to go choppy. And then if it makes the first green candle make a new high, that's the one that usually goes up. So we'll see. That's just another pattern. Just another pattern. They're all patterns, things that we seen the market do a lot in the past. We just kind of expect them to do it again. That's all. And so you wait for it to do it. And you just look for higher highs and higher lows and lower highs and lower lows. And once they break that pattern, you don't like to see it do that. But you realize that once the market's going up, sometimes they like to pop those little tails out, break the lower high just to take those trailing stops out and then continue. So you get all these little spikes down through an uptrend sometimes. That happened yesterday a lot. We had one of those trends. It was just a beautiful uptrend, but every 4 bars, bam, 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 they nailed you with those little spiky spikes coming out the bottom, the little top bottoming tails. They come out, take out all the stops, and then continue to rally. They like to do that. So be careful. That's why we have the dots in there, because the dots will oftentimes hold you a little bit further back. But as Bruce and I were talking yesterday, sometimes the markets are trailing. I mean, they're going up, right? I mean, they're making you money if you were in them, but they're so weak that even the yellow dots can't. I mean, they just keep breaking through the yellow dots all the way up the trend. And those are kind of lousy markets. They're going up and you feel like you should be making money in them, but you can't make money in them because the dumb things keep spiking the yellow dots, even though the yellow dots are underneath them and they haven't broke through the yellow dots and flipped you the other side yet. Because see, we're still, according to the dots, we're still in an uptrend, right? What are the dots land? What are those arrows? That's the average true range. That's all that is. It's just an indicator that tells you when the market's changed to bullish to bearish. We can use them as buy-sell signals if we want to, but that's not really their primary role. Their primary role is just to tell you the market has turned to bullish or bearish. Our signals for entry are red to green or green to red. All right, those are our signals. Green to red, that's your signal to the short side. Red to green, that's your signal to the upside. But if the market is in the bullish side, right, if it's bullish, because this little arrow says, hey, the market's bullish, we want to only take red to greens. If we get a down arrow, then we only want to take, there it goes. See that? Pop right there, just like I told you it was going to do. So what we're going to see now is we see smooth up. We see quiet down. First green bar. That one went too hard. Oh, that's on the news report. That news report just popped. That's the news report. There you go. Rotten, gosh darn it. Was that a swear word? Do I have to tell YouTube about that one? I repent too damn fast. Who was it yesterday told me I repent too damn fast? Oh, damn it. Now I did say a swear word. Now I do have to go and repent. I have to go repent to YouTube that I swore in my video. Damn it. Damn it. I was sitting next to my friend in church one time and had his little daughter with him. She was probably, 5 years old? And he picked up the sacrament water and he spilled it all down his front. She turned to him. She goes, now you say, damn it. Right there in church. I about fell on the floor laughing, rolling around so hard. It was so funny. His little daughter, now you say, damn it. It was funny. All right, we're trying to break above this previous high right here. Okay, what's happening here? You got too many arrows, man. Delete all those arrows. Well, that was the breakout on our news report. We got another news report coming in 15 minutes. Is this going to be a strong run? Well, you missed the breakout, Land. What are you going to do? Well, we'll wait for it to go up and give us 2 or 3 bars. We want to see it break and hold above there. Then we want to see that little red pullback. We want to see a couple little red bars like that, right? See a couple little red bars. Then we'll think that maybe that market will continue higher. This is the Dow. Let's go look at what other things are doing. Oh, you always looking at the wrong market. If you were looking at one of the other markets, you'd had better luck. You're just paying too much attention to the wrong market. Why did you go so myopic into one market? Well, I don't know why I did. I just did. I thought we were looking at, that's why we were trading that market. And we made it bigger screen so you guys could see it better. And then that took the focus off the other screens. And that's why you have multiple screens when you're actually trading with real money. Yes, no, all you guys that are just brand new here, this is an educational environment right here. We are practicing learning and trading. We are not trading real money. It says right there in the upper left-hand corner, it says demo. I'm not trying to pull the wool over anybody's eyes and pretend like I'm trading real money. I'm not. I'm a teacher. I'm teaching. This is education. That's what I was trying to tell you. I used to teach at the Chicago Board of Trade. Oh, you want to know where I first taught my very first teaching class? I didn't just like suddenly walk into the Board of Trade and say, hey, I'm a teacher. And those guys look at me and say, oh, damn, you know what we need is a new teacher that has no experience like you. They said, where in the heck? Why do you want to? Why do we want? Where did you get any experience teaching? Why are you going to be teaching at the Board of Trade? I had to teach before I taught at the Board of Trade. I never mentioned that either. I was kind of talking about that or thinking about that last night. Oh, look now, that Dow's taken off. Here's the break on the S&P, break across that high. Kind of had a little pullback, made that little right there. See that? That's your other little flat top there. If you wanted to take that flat top, that's not exactly your, it's not exactly your A setup, but hey, it's a setup. It's a setup nonetheless, probably a B setup. This little pullback right here on the Russell. Why are you not in this market, Land? You lost money on the first trade, and now you're just missing all the opportunities. You know what? There's 7 hours in this day. Don't push me. Don't push me. Give me a minute. I have to tell my stories. Where did you first teach classes? Maybe some of you guys remember. I don't know if any of you guys remember. Any of you guys remember a guy named Ken Roberts? Any of you remember a guy named Ken Roberts? I'm going to go look it over in our comments. Michael Bruce. Michael Bruce is saying hello. Michael Bruce, I saw your comment yesterday afterwards. And I apologize for not seeing it before while we were online, but I did read your comment yesterday. And you said you put on a iron condor. I'm curious how that turned out for you. Look at this market go out of that news report. Wow, wow, wow. I told you these number 2 level news reports are usually the good ones. I like them better than the number 3s. The number 3s go too wild and crazy. The news reports, the number 2 news reports, they're generally, they don't wipe you out. So, here we're getting a little pullback here on the Russell. Now we're going to look for that 1, 2, 3, 4, 5. We got 5 green bars out of that breakout. That's good. I usually like to see at least 4. So we're on 5. Now I want to see a little pullback. What happens here is now you feel bad. You're feeling all this FOMO because it's not coming back for you. We need it to come back and give us just a little bit of a reprieve. Come on, guys, take some profits. Take a couple of, and then, okay, look at the volume. Volume's starting to drop. So volume's losing a little mojo up there. Oh, wow, look at the NASDAQ go. Land. And here I am, the guy sitting down $100. Look at that. Land. In hindsight, you look at this thing and you're like, why don't you just go in on the arrow when it crossed right there? Well, that was 738 and that arrow came in there. We had a flat top. And everything was just perfect setup, wasn't it? You always do that. You're always like, in the morning, you're always like, what the heck? You suck at this. I know I suck at this. You guys are better at this than I am. I know you are. You're all out there making money hand over fist while I'm down here wondering what the heck's going on. Okay, we're getting a little pullback here on the Russell. So I'm going to drop one in to trail on the Russell. We're going to do a single. I got a lesson I want to show you about what Bruce asked, because I've been talking about Bruce. Oh, and I want to tell you where I taught my first time I ever taught, where I started to learn how to teach classes. First time I was ever invited to come and teach. Now, I'd been trading. I'd been writing my software. You know, this has been going on for years, where I'd been learning trading, working with people, trading myself, trading. Let's put a stop in here. Oh, I don't like this. Just got stopped out again. I didn't continue higher on that break higher. Of course it didn't continue higher, man. This red bars is just going to turn around and cascade all the way back down to the magic blue line right down in here. How come you're trying to take a long off of that? Well, because I thought we might get a rally, a pullback, and a rally. So that was the first candle to break a new high. Wasn't green. Well, you don't know if it's going to be green until after it closes. You can wait until after it closes, but by then, sometimes it's already clear the hell up here. I can say hell because I already swore once and I already have to confess my sin. Oh, now it's flushing. This is exactly what Bruce and I were talking about. And how are you going to handle that? How are you going to handle that? We're going to do it with reversal orders. And I know we've talked about reversal orders, but not everybody's been talking about reversal orders. And I'm going to show you one of the problems Bruce is running into. And I'm going to show Bruce how maybe we can solve that problem together. Daggone it. Now this market is just flushing back down. Is it going to be a nice smooth, look, smooth, choppy, smooth, just like I said. You'd think that if I know how this market's move, how come I can't capitalize on them? Smooth, choppy, smooth, choppy. What is the choppy land? What do you mean choppy? Well, it's not smooth. It's making highs and lows and higher lows and lower highs, and it keeps chopping, chop. That's the accumulation zone. So these guys that are accumulating shares, they figure they want the market to go up. And so they pump it here, and then they accumulate here, and then they pump it again here. So they knew that market was going to be bullish on that news, I think. That's what I think. I think they knew. So they came in here, they ran it, popped it before the news, chop down to the news, accumulate, and then news comes out, and they rode it all the way up. Now they're getting rid of their positions because we got new news coming out in 5 more minutes. That's what I think, because I think these markets are manipulated. What makes you think that, Lan? Well, you wait till Pitt News Magazine comes out and you're going to go, oh, shit, these markets are manipulated. So if you know what they're doing, you can generally play off of it if you're smart enough and wise enough. You can execute well enough. Let's go and see if this thing wants to go one more time. You keep trying to go long on this market, Lan, and it keeps trying to whip around and go short. I know. This is my setup. First candle to break a new high. It's got to go. See, I'm looking forward to a continuation of the uptrend. We got an uptrend. We got a little pullback. I'm looking for the ABC pattern. If it doesn't go, well, it doesn't go. There's no better pattern than that one. Why didn't you catch that one right there? You called that one. Well, that popped too fast, and I wasn't ready for it to go like 10 bars. It popped too fast. I didn't have my trailing stop in there on that one. I wasn't ready for it. That was coming into that news event, and that news event took off. So it went a little bit too fast for me right out of the gate. I was like, whoa. But I guess I'm going to try this one. We're in with one. It's going. We could add our second in there. If we think that thing's going to go, watch. Is the volume coming up? Is that stepping in? We're going to step in with the second one. All right. Come on, baby. Rock and roll for me. Now we're going to go full screen on it. All right. Okay. Keep her in there. Scalp and trail, Lan. Scalp and trail. What are we going to scalp? It's not going high enough to even scalp yet. Come on. Push it up there. Go. Go. Push. Okay, we're going to add our OCO. Now, this is one of the things that we're going to talk about. This is part of Bruce's problem. See this OCO? I'm long 2. And I'm going to put 2 in there. And I've got, what if I want to scalp and trail right now? 255 is where we're at. 255. We have to hit 255 just to break even. So we have to get our money back. That's how, you guys all know that's my thing. I'm going to bring this up to break even because last thing I want to do is go in the hole anymore. If it doesn't give me my money back, I don't want to lose money. So I got that set there to get my money back. 255. Come on, pop up there. It needs to go up there. Come on, yeah, rally up there. Come on, you little dog. Come on, doggy. Push up there. Push up there. Oh, look at that. Watch that small chart in the upper right-hand corner. That's your tape. That starts to get red on the tape. Red on the tape. You'll slide that stop up in there and capture a little bit of the loss of profits. Come on, touch it, touch it, touch it, touch it, touch it, touch it. There we go. All right, we got our money back $30, land. Look at that big move in there, and all you got is $30. Hey, I'm back to green. Okay, so don't get mad. Feel glad. Okay, now what are you going to do? What if that thing goes to the moon all the way up here and you just took it off just enough to get your green back? Well, that's okay. You know what? Because these markets make these trends all the time. They do lots of them. And so we'll just catch the next one. That's all right. My goal is just to get my money back so I don't feel bad about myself. And then I can't trade. I get nervous, get scared. Got to get my money back. So that's how I do it. I like to get my money back. I know a lot of people say, don't do that, land. That market could go to the moon. Yeah, but how many times have we sat here, had the market go to up and would have given us all of our money back, and we're like, well, we're going to just stay in and go to the moon because this one's going to go to the moon, and then it didn't go to the moon, and it came down, stopped us out, and we ended up losing another $200-300, adding that to our losses as opposed to taking our profits when we had them. Well, we had some profits. Let's take them and bring ourselves back to break even. Now we can wait for a new setup, wait for a new trigger, and then wait for a new decision point. All right. Now we made some money. Now we're going to have a lesson. We got to have a lesson too. And I got to teach a lesson. And in the process of teaching you this lesson, we'll probably end up, I don't know, we'll probably end up losing some money, but we're going to try. Okay. Here's the lesson Bruce is running into. Okay. As you guys all know, let's come up here and draw some pictures. Bruce has been taking his positions like this. The market's been coming down. So let's say that we got, Bruce has got the magic blue line coming across like this, right? Actually, it would be like this. It'd be like this, right, Bruce? Okay. So the magic blue line is coming in like that. That's our VWAP. And Bruce has been trading the VWAP. Michael Bruce says he placed his iron condor on Monday. Did it make money? That's the question I wanted to know. Okay, so then the market comes down like this out of the opening bell, right? Comes down, comes up, comes down, comes up, comes down. And he's down here in this 3-drive pattern down, right? Drive one, drive 2, drive 3. And Bruce is like, hey, this market likes to go back to the VWAP, right? And he knows it's not going to go straight back up, but it might do something like this, right? It's going to go up and it's going to come down. It's going to go up and it's going to come down, but it's going to work its way back to the VWAP. So Bruce is like, hey, I'm going to see if I can't wait till the market gets down here into this bottom region. And I'm going to be very cautious, very careful. Oh, look, good thing we took our profits when we did. Look at it flushing right off of that 39,050. Just right where we had our stop limit to take profits. This is another buy signal, though, because it's coming in. If it makes first candle, green candle, make a new high, it should go up a little bit more, but it's not going up very fast. We got a news event coming out right now. 8 o'clock. There it is. What's it going to do? What's it going to do? Boom, boom, boom. Going to go up, going to go down. $8 o'clock. Existing home sales. 3.9 forecasted it was 4. That's bullish. Existing home sales. 3 forecast 3.1. That's bullish. Now, again, as I always say, it's not for us to determine whether the market's going to go up or down based on the news. It's for us to know that the market's going to go up or down based on the news. What? What did you just say? I said it's not for us to determine whether the market's going to go up or down based on the news. It's just for us to know that the market's going to go up or down based on the news. What? News events will move the market. It's not for us to determine whether the market's going to go up or down based on the news. We're going to watch the market and see which direction it goes, and we're going to play off the patterns because we don't know if a positive number in the news event, it should make it go up, right? But how many times have we seen positive numbers come out in the news event and the market flush? Happens all the time, right? So again, it's not for us to determine whether the market's going to go up or down based on the news. It's only for us to determine that the market is going to go up or down based on the news. We know the market's going to go up or down based on the news. Generally speaking, the market's not going to die and go sideways. Doesn't mean it can't. Certainly can. Market can do anything it wants, right? But generally, those are times when the market's going to move. Not for us to determine whether the market's going to go up or down, just that it is going to go up or down. We're going to play whatever direction it goes, whether it's bullish or bearish. Now, we can have a bias and say our bias is long, land. That's good news. It should go up. So we might be a little bit more aggressive to the upside. But how many times have we seen the market flush on good news? All the time. All right. Because, hey, the market didn't think it was good enough news. All right. It wasn't good enough news. And so the market flushes. Or they have built in thinking that the market was going to go, it was going to be better news than it was. And so the good news comes out, but it's not good enough news. So it flushes. Happens all the time. So it's not for us to determine which direction the market's going to go on news. It's only for us to know that the market's going to move on news. And we're going to play the direction it goes. That's the point I'm trying to make. All right. This thing wants to be bullish once again. It's breaking across that first green candle to make a new high. Question is, because it break up across here, is it enough to keep the momentum going? And I don't trust it. I don't trust it. Look at, we're on the MACD backside of the MACD. Doesn't mean the MACD can't curl and go up. MACD follows. It's a trailing indicator goes up. But I don't trust it. Do you trust it? I don't trust it. I don't trust it. This is a little ABC pattern down here. How are you going to read that thing, Lan? Sorry, Bruce, I got sidetracked on your lesson. Are we going to call this A1? I'm going to call this A1. Could be an A. It could be an A2. But I'm going to call that A. Well, you know what? Losing my voice already. How's that? We'll make that one A1. This reset here came back farther than 50%. See, good thing I didn't trust it to the long side. Faked out right there, and boom, went this direction instead. So the news wasn't good enough for him. Well, it might have been. It might just be spiking down here, spiking all these trailing stops. It's just weak right now. I don't want to really try this. It's not like a really nice market here. But hasn't broken through the yellow dots yet. We're still bullish on this whole thing. Look at that. Still bullish on the whole thing. A1, that means this would be a, let's call this, let's go in here and go ahead and call this a B1. Right here. I think this thing failed on us enough to call that a B1. We could make we'll have to make adjustments on all these things if we get more information, but for now we're going to call that a C1. Is that a C1? No. Get rid of all this stuff up here. Delete all those lines. Delete all those arrows. I don't think so. I think we got to go back to our original thought process there. That there is actually that's actually a C1. This one here is actually our B1 right there, and this is our A1 right here. Well, what was that back there, Lan? That was an ABC bottom formation. That was a false start, but that was our first start. That's why I wanted to start. Voice gone. Well, if you wouldn't talk so much, you wouldn't lose your voice. I thought that was the point of being here. All right, we're breaking lower. Oh, and I forgot to tell you where I first taught my first classes. Do you guys remember? Anybody remember? Any of you guys in here? Michael Bruce says he got distracted. Does that ever happen to me? I never get distracted. I don't know what you're talking about there, Michael Bruce. Got distracted and made money. That's not a bad distraction to have. There we go. We're no longer in the bull trend. We're now bearish. Does that mean we want to take it down? Does that mean we want to take a short position? Not necessarily. You can take a short position right there. Oftentimes these arrows are good places to get in and out of the market. You can take them, but that's not necessarily what that means. So I got two stories going at the same time here. I was telling you, where's my drawing? Which market was I drawing on? I thought we were drawing over here on the Dow. Where did I have? Oh, I got rid of all my drawings accidentally. Ken Roberts. Did any of you guys remember Ken Roberts? Did any of you guys ever know Ken Roberts? There it goes. Flush, flush, flush. Okay, we want to see it pull back. There's a little pullback and then go to the second leg. We're on the back side of the MACD. So that's our failed C drive. That's what that is. That's why I put that in there. That's our failed C drive. And it's actually, if we want to be more technical here, this is actually, oh, what the heck is that? Get out of there. I want it to be like this. This is actually an A2. Let's be more fractal, should we? And this is an A3. If that's an A1, A2, and A3, that's a failed A3. And that is Bruce. Oh, there's Bruce. I've been telling your story, Bruce. Good thing I was delayed on telling your story, because you just said, "Good morning, Lance. Sorry I'm late today." That's okay. I haven't told your story yet. I kept telling everybody I had a good meeting with you and that we were gonna solve a problem for you. Oh my goodness, look at that market fall. That's called our X1 right there. How far back's it gonna come, Lan? Oh no. Put your Fibonacci ruler in there and see. Right back to the Fibonacci sweet spot. It's where it should come back into 50% right there. 50, 61.8, right into the Fibonacci sweet spot. That's where we expect it to come back to. The problem is, this is our A1, A2, A3 coming back into the sweet spot. It should turn and give us another little arrow to the upside, and we can go back into the B drive, B1, B2, B3. But if it completely fails on us and just dies and comes back down to the magic blue line, we'll just have to throw the whole thing out, start all over again. Just depends on how far back this market's going to come. We want to look for the first green candle to break a new high down here in the Fibonacci sweet spot and anticipate that we're going to get another yellow arrow and a drive high. Once again. Okay, well, now you're here, Bruce. I guess we can finish. I was trying to tell everybody, does anybody know Ken Roberts? Nobody? If you know Ken Roberts, say, "I know Ken Roberts," down here in the comment section. Anybody know Ken Roberts? You guys don't know Ken Roberts. That's way before your time. Ken Roberts was like a superhero back in the day. How long ago was that? I'm 60. 20. What's 20 from 60? 40? No way. It wasn't 40 years ago. Is he still alive? He's probably dead. He looked like he was dead, death wormed over when I knew him. Anyway, that was 40 years ago. Ken Roberts was quite a big deal in the futures market. He was a marketer, and he came out with a book called TWAMPM, TWMPMM, the world's most powerful trading manual, or something like that is what that stands for. And so he made that book, and then he marketed the living juicies out of it. He sold that thing from here to kingdom come, sold millions of copies of it. And so it kind of put a rage of people wanting to learn to trade the futures market. Now, I'd already been involved in trading and been trading already, and was talking to another guy called Scott Berry. And why am I telling this story? I'm telling you where I got my start, where I started teaching. I didn't just kind of walk right into the Chicago Board of Trade and say, "Here I am. I'll teach here. Never taught before." I'm trying to tell you where I learned to teach, where I first started teaching classes. Bruce, you missed it. I used to teach at the Navy, the U.S. Navy, when I was just a young buck. That was the first place I ever taught a class. And it wasn't even trading. It was, here we go. We're bouncing off that 61.8. Let's watch and see what happens. 50, 61.8. See if it'll rally here. Are you going to take it long, Lan? Are you going to take it long? Are you going to go long on this rebound? Yeah, let's do it. let's come in here with our trailing stop and we'll drop one in there. If it turns around and starts to go right here, if it breaks that and goes down to 78.6, we're going to throw that out. I don't want to take it if it has to go all the way to 78.6. I don't know. We'll see. And we might. If it goes to 78.6, I'm not going to take it off the first bounce. I'll make it rally first and take it off the second one. But if it comes off of the 61.8, the 50%, I'll take the first bounce. 61.8, I'll certainly take the first bounce. First green candle off of 50, the first green candle off to 61.8. But if it has to go down to 78.6, I won't take the first green candle. I'll make it rally first, giving me a pullback and take the ABC pattern. Why you do that, Lan? Probabilities. Just the probabilities, my friend. Just playing the probabilities. Well, how do you know that's the probabilities? Well, as I was just saying, I've been doing this for 40 years, and that's the probabilities that I've experienced. Does it mean it happens every time? No. Doesn't happen every time. In fact, every time I try to do it's when it doesn't happen. But then I look back in time and it happens every single time except for the one time I try it. You know how that goes. You got Murphy sitting on your shoulder. Murphy's Law. Okay, it's bouncing that 61.8 right now. Spiky dude it. The problem is you have to decide where everybody else drew their 61.8s at. So I drew mine off of this bottom right here. A lot of other people are going to draw their 61.8s off of this bottom down here. So at this point, we're really only at 50 if we go off the entire trend. And there's going to be a lot of guys going to do that. All right. And that was the problem I was having here at first. I wasn't exactly sure where to get rid of all those arrows. Goodness sakes. I wasn't exactly sure where to put that A1, whether I should put that A1 back here or right here. So if we're going off the 50%, okay, we're taking it off the 50 right now. I'm going in with a single. If it'll push, we'll add a second one. If you're going to push, watch the volume, watch the little tiny chart in the upper right-hand corner. Is it going to go up? Is it going to go? Is it going to go? Or is it going to just fail on us? We're looking for a reversal. I don't like to take reversals. You guys all know that. But we're taking a bounce off of the 50. And we may have to take a bounce off the 61.8 and get stopped out here. This thing, look, you rotten little market. Don't you dare come back and stop us out. I can't believe you're going to do that on me. You rotten little, I want to say the B word. You rotten little bugger. Okay, it depends on where these people draw their arrow, their Fibonacci rulers. I think they're going to draw it down here. I drew my initial one up here, a little bit more conservative. So I'm down here breaking through 61.8 already, going to 78.6. If it goes to 78.6, I ain't going to take another long until it gives me a proof that it wants to be there. Most people are going to draw I think more people are going to draw it down here. That's why I was a little concerned about this. We'll send this to the back. Being an A1 over here. I think more people saw that as an A1. So we may see one more opportunity here to try another long position on the reversal on 61.8 down here. That's a long pullback. Why don't you take the short position on X1, Land? Man, you'd be rich beyond your wildest dreams. Because I didn't think it was going to pull all the way back to 61.8. Well, how can you solve that problem? Well, that's what Bruce and I talked about yesterday. And if I could ever get an opportunity to get up there and tell my story, I would teach you what Bruce and I said we were going to do to solve that problem. But I have to tell the story. I have to tell Bruce's story. He's here now, so we can do it. Michael Bruce got his stops gunned. Is there an article? I think, I don't think so. Was there the February magazine? Wait, you can't see that, can you? Oh, Lan, you're not watching. Are you going to get in long right here? You're missing it. You're missing it. Is it green? It's not green yet. The market kind of died. Sometimes it'll come back to the 50-yard line like that, and then it just dies. It doesn't turn and rally. It just dies. And then you're sitting there looking for the rebound, looking for the takeoff, looking for the moonshot, and it just dies and it just goes sideways. It's really common to see it just go sideways through here. And then kind of get a little footing and decide later when it wants to take off and go. We're not even at a 15 after. We're like 18 minutes after the hour. Okay, that's the first green candle. We can go ahead and take one on that. Taking a single because it's being wumpy. Look, volume, green low, green low, green low. Come on, we need you to push that volume up right now, buddy. We can't put on a second contract if you don't give us a little something to show for it. How come you trading the stupid Dow? Go trade something else. I don't know. It was the one that was moving at first. You should be over there on the Russell. I know you guys trade the Russell. Let me know if you made any money on the Russell. So none of you know Ken Roberts. That's funny because he was so popular. He was the land turner of his day. Just kidding. I'm nobody knows me. I'm a nobody. I'm famous in my own mind. All right, we got stopped out again. What a dirty, rotten trick. Okay, let's go learn Bruce's trick so that we can solve this problem that we're having. All right, Bruce is back in the house. So Bruce plays the blue line, magic blue line, right? VWAP. So the market comes down. Here's Bruce's strategy. He likes to see it come down, make his little ABC, and he can do it to the upside too, right? So it's coming down like this. And then he says, okay, it's time for it to reverse and go back up. Now, Bruce has been trying to capture the very bottom of this trend right here, right? And so Bruce will come in and he'll say, I want to get in long right here. And if it doesn't immediately go in Bruce's favor when he gets his first little signal indicating that he wants to go long, then he starts to build a pyramid, right? We talked about pyramids a couple days ago. We talked about pyramids. So Bruce starts building his pyramid, right? And it's an upside down pyramid. It's an accumulation pyramid. Now this is the concept that we've talked about in the past, because this is the idea here is to do basically the same thing that the large speculators do, right? Because they get into a certain situation and then the market gets down, and he's just repeating that accumulation distribution model from the Wyckoff theory. He's just trying to do it on a smaller time frame. He's doing it on the intraday time frame. So he's going to start buying right here. If the market doesn't just kind of go in his favor and let him make a whole bunch of money on the way up, well, it starts coming down. He'll add another one. Okay, so now he's dollar cost averaging into a losing trade. And then he does it again, and then he does it again, and then he does it again. And what that does is it brings down his average price down so that it only has to retrace like this far, and then he's back in the money, right? And then he's got like 6 or 8 contracts. And then when that thing takes off and goes to the moon, woohoo, he's rich, rich, rich beyond his wildest dreams. All right, because he's built himself a nice accumulation down here on this strategy. The problem is the market, as you all know, can be fickle, right? The market doesn't always think that this is a really cool idea to have you accumulate a whole bunch of shares and then turn and go. What it likes to do is it likes to come down and let you accumulate a whole bunch of shares and just keep coming down and keep coming down and keep coming down. The market can stay irrational longer than you can stay liquid, right? That's the saying here. Good thing we got out. Look at that Dow. Still flushing. If we were building our position and going long, buying in anticipation of a rally up out of this thing, we'd be sitting on a Bruce problem where we'd be having a whole bunch of money down in here, building up this maybe we got in here and didn't get out. We get another opportunity, we didn't get out. And now we're in here with like 4 or 5 contracts sitting in here trying to wait for this market to go up, and it ain't going up. So this is what Bruce is running into. So he's like, Lan, how do I solve this problem? How do I know when it's going to turn and go? I said, well, your first thing is let's wait until it does turn and go. All right. Let's not keep trying to capture the reversal. As you've heard me say a million times, reversals are really hard to capture. All right. So we're going to delete all these arrows So one of the suggestions I gave to Bruce in this situation is I said, hey, Bruce, what if what we do is we wait for the market to actually go before you get in? Don't try and capture the reversal. Wait for it to go up, prove that it wants to go, give us that little pullback, and then right in here, try to go. And he says, well, I do that too. So he says, but sometimes right here, I get in, and then the market doesn't turn and go, just like happened here, right? For us, it didn't turn and go. So it turns and starts to fall. So Bruce is like, well, I just dollar cost averaging in some more. I buy again, I buy again, I buy again, I buy again. And then the market goes down, makes a whole nother leg down, and I just lose a whole bunch of money down here. He says, most of the time I get pretty good luck. I pick it pretty good, make a bunch of money. But that one time when it doesn't do it the way I think it's going to do it, it blows up my account and I lose everything because I'm going in, and it never does turn around and never does go in my favor. So what do we do? So I said, well, let's not build a pyramid down there, or let's think about how we can build a pyramid down there that's a little bit different than how you've been doing it. So one of the questions was, well, I want to be able to get in and move my limit orders to different locations. So he goes, okay, so here's the situation, Bruce. So I'm going to do it right now. Now I know this isn't, we may end up showing a loss on our account, but that's okay, because that's what we're here for. We all know we're in a demo account. So we're going to come in here, and Bruce says, okay, I'm going to go in by at some point let's say I have 5 contracts that I build into my system. All right. So I've added on down this trend, and I'm at 5 contracts. And he said, I want to start taking some off at different levels like this, right? I want to put in not like that. So he wants to come in here and he wants to put in limit orders like this, like this, like this, like this, like this, right? And so when this thing starts to head back towards the magic blue line, which is actually going this way this time, but when this thing starts to go up, he wants to start taking these off, right? You've seen that all in my little slide book. So that's a pattern that we talk about, right? If I can find it in here real quick, maybe I don't want to take the time to go slide through all these slides. And I got so many slides in here, I can't find them all. So, all these patterns that we got in here where we take profits, right? So we take profits like this. Okay. So Bruce is in and then take a limit, like this pyramid scalp and trail strategy. This is what Bruce is trying to do. He's like, the problem, Lan, is that you've got buy quantity 8, and then you've got limit 1, limit 1, limit 1. But when I get in like that, I want to put my limits on. He says these limits here are not attached to a stop. So if I get stopped out, that doesn't get rid of them all. So I said, well, this is how you do that. All right. So let's go in here. And we're going to kill all these. Boom, 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 boom. And Bruce says, I come in here, I right click, I say add OCO. And then the problem is I'm long 5 and I have sell 5 and it's stuck right there. I want my stop attached like this. But the problem is now I got 5 and it's stuck. How do I break that apart and make that 1, 1, 1, 1, 1 and have this still be 5? Well, the exchange doesn't let you do that because that's one ticket. And they look at things as tickets. All right. So what is on that ticket? Well, on that ticket is 5 positions, and you can attach to that 5 position ticket a 5 limit and a 5 sale stop. Okay. That's how the exchange does it. It's not the software's limitation. That's what the exchange does. So they have a ticket, and on that ticket is the number of orders, and they have to match. They have to be equal. You have to have a sell limit, and you have to have a buy limit, or a sell limit and a sell stop and an entry position, all at the same quantity for that ticket. You can't have different quantities for one and the other. They look at them as a ticket. That's how it works. All right. So here is the solution. I said, now it takes a little bit of different thinking. All right. So we're going to exit the chart. We're going to get out of here. And this thing wants to go short. Let's try and go short. So you have to go in with quantity 1. So you go, I'm going to, you have to do it with your QOCOs, and I have to have the right QOCO. So we're going to sell, market, 12 stop, trail ATR. Would that work for us? I'm just trying to make sure that I got sell, market, 50 stop, trail 1.1. I don't want to get too close. I want to see if I've got something. We'll use this one right here. So, okay, so we're going to sell. So we're going to go in with quantity 1. Now I got 1 ticket. Now I got 2 tickets. Now I got 3 tickets. Now I got 4 tickets. Now I got 5 tickets. Okay, I got 5 tickets with 1 on each ticket. So now I can drag all these limit orders to wherever I want them for each ticket. Okay, so I got 5 tickets, and all the stops are at the same spot, basically. All right, they're all basically at the same spot. Now they're all programmed in here because I got them programmed to trail. What do I have them trailing? Trail the ATR. So they're going to sit at 12 back, trail the ATR. So if that market falls, those will start to trail on the ATR. But right now they're kind of a little bit close. So I'm going to say yes, move them. Yes, move them. Yes, move them. I mean, we're getting stopped out. So, but that's the idea. That's how you solve that problem. You have to put them in on individual tickets, and then you can have your stops, albeit different levels, or you can do with your stops whatever you want. They're programmed, so it's going to say, "Hey, are you sure you want to move that?" I'm moving that. Say, "No, I want to move it." Okay. So now we can come in, and we're short 4, and we can have our limits wherever we want. We can have as many limits. Each one is a ticket with quantity 1. Right? We got stopped out with 1 already, so now we're only short 4. So we got 4 on here tied up. Does that make sense? You have to kind of set it up in your QOCOs to do that. Well, what does your QOCO look like, Lan? That was sell market. That's our number 1 on here. So that's what this one looked like. Okay, when I put that on, it had an attached stop at 12, and then an attached limit at 24. And then I told it to trail the ATR after 12, right? So that's what this one was set up to, trail to break even. And it was a little too close. That's why I started grabbing those stops and pulling them away. But that's how you set this up. And then you just go in with 1, 1, 1, 1, 1, right? And that way you get 5 tickets, and then you can have 5 different. But then you can tell all these to go to the same spot. So like you can come in here and you can say, I want this to trail the ATR now. And it'll jump to the ATR, edit this one, trail the ATR, edit this one. Edit this one, trail the ATR. That one's already trailing the ATR. Edit this one, trail the ATR, edit this one. And you don't have to have them all be trail the ATR. Maybe you have this one trail, I don't know, maybe we'll have this one trail the price bars back. And we'll just put in here 2 price bars back. Okay, so it's going to trail 2 price bars back. Oh, it didn't like where that 2 price bars back is inside the money. It can't do that. Okay, so we're getting stopped out on our trailing stop. Okay, so we got 1 got stopped out. We got that limit in there. Okay, so now Bruce is like, I want to go long. So Bruce can come in here. You can say, okay, do the same thing. We're going to go in here. We're going to go 1. Now Bruce can add 1 more. And if it comes down and he doesn't get stopped out, because maybe Bruce wants to build his pyramid, he can bring this clear down here. All right. So then another one comes in. Then he can come in and he can say, okay, I want to buy. Now he's building his pyramid. See, as it comes against us, we're dollar cost averaging down. It puts that stop there. If you don't, you can always move the stop away if you want to build a pyramid. Okay, so this is how you would sit here and build your pyramid with tickets 1 at a time. And then you got your limit orders up here and you can spread those out. So you have to build your pyramid if you're going to do pyramiding. Build your pyramid with QOCOs, not with the regular tickets. Because if you do the regular tickets, you could do that. Let's see. Let's try that too. So let's exit out all these. Well, no, you couldn't. You can't do that. Because if you come in here and you add your OCO to an existing ticket, it wants the quantities to be the same. Now it'll let you get out of whack. I think it'll let you get out of whack. It'll set yeah, it will. Watch this. We're going to exit out all these. Okay. And the reason you don't want to do it by right clicking, let's say we're in with the market, we're going to go in with 1. All right. And we're going to set our OCO. Let's go in with another one. In with 2. Okay. Now we're going to add our OCO. And we're going to come in here. Now we're set with 2 and 2, right? But we wanted those broke apart. But now if I'm going to come in here and just hit quantity 1 buy, look, now my long is 3. It'll let you do that. So now I'm long 3, but I only have 2 on my limit and 2 on my stop. So if I use this order up here, I can sit here and add 2 an existing position and dollar cost average. Now I got long 6, but I've still only got a sell 2 on this one and a sell 2 on that one. So you can dollar cost average in, but we set this. Now if I come in here and add OCO, what's it going to do? See, it's going to be 6 because it's set to the 6 that this ticket has 6. But now I have 6 and 2, which is more than what I need. I don't need that. I don't need these two out here. So I need to delete those. So by right clicking on it, it's going to screw things up. I have to think about if there's any advantage to doing that. I don't know. I've never done that kind of strategy before. So the whole point is, what we want to do is we want to come in and use quantity 1 for everything. And if you want to go in with 3, hit your order 3 times. 1, 2, 3. You have to give it a second. It has to go to the exchange and fill the order. So there's 3. Now we got 3 limits and we got 3 stops. All 3 stops are trailing on, I've got them programmed to all trail on the ATR. So they're all at the same spot, but now we can move our limits to different spots. Okay. So that's how you solve that problem of dollar cost averaging in, and do it with a single and set your limit and do it with the QOCOs so that you can have separate limit orders and still have them tied together on your OCOs with your stops. And if you have your stops at different locations, because you might want to do that, right? You might want to have one stop way down here because you're going to do a little bit of building of your pyramid. You can do something like that. And then, it'll take these positions off as the market moves against you. But as you add more in, market comes against you and you want to add one in, add it in down here with your QOCO, not with your standard or order. And then when you add it in, now it's going to give you another one. Now you got another one you can move somewhere. And the stop is going to be set to wherever you have it programmed in your QOCO, in this case on the ATR. So now we got long 4. We got 4 stops all at 4 different locations. These 2 are trailing on the ATR. These 2 are static stops. And then we got all of our limits up here. I know that's like where the heads of a lot of people are going, I don't know what the heck you're talking about. You and Bruce are like off. So I don't know if that helps solve that problem, Bruce, for you. The other problem that we were having that Bruce wanted to talk about was when the market came down, it would come down into this location, right? And then he would start building his pyramid, spit it out. His pyramid, you start building his pyramid down here. And I said, well, and the problem is that it works great until it doesn't. So it's a great system until it's not a great system anymore. Because the market stays irrational longer, you can stay liquid, right? And it just keeps going down, down, down. You keep adding, and eventually you got to, call uncle and get out and take your big loss. And it really destroys your account when that happens. When it works, it worked great, and it works great a lot, and that's really great when it works. But when it doesn't, it ain't so great. So my point was, maybe what we should do, Bruce, is there's several things we could do here. You could just trade the reversal strategy, which is, my reversal strategy that I've taught you in the past. Let's go and let's trade that. So the point is, well, we're making money now. Let's let it make a little money. See if it'll let us make a little money here. We can example it, see if it'll run a little bit for us. You're down $1,200, Lan. No, I'm not. This is a demo account. For our trading, we were actually up, right? Didn't we get back to green? And then we started exampling, and that's when we ran the account down. It doesn't matter. We're learning. That's going to stop us out. Okay, here, let's do this then. Let's come in here and do the strategy. All right, so we're going to come in, and I'm going to once again drop this in, and we're going to take a short position. All right, and then we're going to use these numbers. Yeah, it goes 1, 3, 5, 7, 9, 11. Bruce is at this point, Bruce is very bullish on the market. He thinks the market is going to go up. He's anticipating a rally in the market. It's come down all day long, and he's anticipating it's going to go back to the blue line. So we're very bullish on the market. So we're playing the bull side, right? So on the downside, we're only going to take 1. On the upside, we're going to continue to take more positions. So that's the idea. So now we're going to go in. We'll take rather than dollar cost averaging, we're not going to dollar cost average, Bruce. We're going to just keep getting out. And I'm going to show you. Okay, so we're going to get out. Watch this. And it's going to do the same thing. Okay, it might still, it's not quite as dangerous as building a big old upside down pyramid or a big basing pyramid, but it's kind of, I was thinking about it and I was thinking we could try this same concept for Bruce. And I don't know if it's something you really want to do, but why not? Let's try it. Shall we try it? So we're going to take a short here, one contract, and we're going to ride this thing down because, right, if the market's going to go down, Bruce, because you're not making money on the upside, well, let's see if it'll make some money on the downside. And now what we're going to do is, because we are bullish, we're going to take 2 to the upside. So we're going to put in 3 and drag that thing in there. And we're going to play that reversal strategy. But we're only going to play the reversal to the bull side because you're bullish, because you think the market's going to go to the blue line. Now, in this case, we think the market's going to go to the blue line, which is actually down here. All right. So we should be actually playing it on the other direction. But that's all right. We're going to play the bull side. So on the way down, because we're bullish, all right, we're bullish this market, we're only going to take one position anytime the market wants to go down. But anytime the market wants to go up, we're going to take larger positions on each reversal because we think the market's going to go up. We got our bias to the upside. And if the market's going to go down, we might as well make money while it goes down. So it's going down, so we'll make our single. But when it turns around, we're going to reverse that position, and we're going to go in with 2 to the long side. All right? And then if it goes up and stops us out, we're going to take a single to the downside again. We're going to get stopped out. We'll stop ourselves out. Okay? We'll be in with 2, so we'll put 3 to the upside, right? Because we're bullish on this market, and we're only going down with 1 because it's not going in our favor. Now, normally you would be adding on to a losing position, right? You'd be dollar cost averaging in, but we're not going to do that. We're bullish this market. We think the market's going to go up, so we're going to go short as long as it wants to go short with a single contract. When it turns and starts to go up again, we're going to catch that reversal with 2 contracts, which we have to put in 3 because it has to liquidate the short and put in 2 long. If it goes up, then, well, we got our miniature pyramid. Okay, we got 2 contracts in. Let's say it turns and goes back down. Well, we're going to stop out with 2, and we're going to put 1 short. So we would trail with 3. But this time, the next time the market starts to rally, we're going to put in 5 contracts, and we're going to go long with 3, and then we'll go long with 4, then we'll go long with 5, we'll go long with 6. But each time the market goes down against us, we're just going to go short with 1 because we're bullish, right? We have a bullish bias to the market. So each time it wants to go down, we'll go down with 1. We'll stop out and take a short position with 1. But each time it turns and goes long, we're going to build our pyramid. We're going to go long with 2, then we'll go short with 1. We'll go long with 3, we'll go short with 1. We'll go long with 4, we'll short with 1. Go long with 5, short with 1. Go long with 6, short with 1. Okay, does that make sense? So you're going to still build your pyramid like you want to do, but you're going to do it in the reversal fashion. So if the market does continue to fall, you're just going to take off your big pyramid and take that short position, let the market make money on the way down. Michael Bruce, he likes it. He likes it. Hey, Mikey, he likes it. What do you think of that idea, Michael Bruce? Oh, Bruce R likes it. Oh, let's see. Michael Bruce says that's an interesting concept. Bruce R says, that does solve a problem. It does solve my problem. I want to see you do it. Now, Bruce, we have an appointment next Monday or Tuesday, right? Can't remember which it is. So I want you to try this and see if that works for you. The rest of you guys can try it too, obviously. That's why we're here doing it here. So you guys can try it too. So you got your bias to the long side. You're going to do the reversal strategy, but only take singles to the wrong side or to the short side. Take bigger positions to the upside. This market just died on us, didn't it? It's just dead. Let's go see what everything else is doing. I thought we might get to go look at the stock market today, but then I was like, nah, we're not gonna have time to go look at the stock market. We'll do stock market tomorrow. All right. We'll go place some orders in the stock market. It's kind of died a little bit lately. I'm not making nearly as much money this week as I did last week. Last week was a boon of a week in the stock market. Made a whole bunch of money. This week, not so much. Got stopped out on a bunch of trades, took some profits. It's kind of been dead this week for me. All right, here we are. We're long 2. So now what we're going to do is we're going to come in and we're going to do, if we're long 2, we're going to put in 3 and we're going to trail 3, 1 price bar back. So what's that going to do? It's going to liquidate our 2 and put us short 1 again. But now we're long 2 because we have our long bias to the upside, right, Bruce? You're at the bottom of the 3 drive trend. You're anticipating this market's going to go back to the blue light. So you would then come in here, put in your long 2, trail with quantity 3, which is going to stop you out with 2 and put you short with 1. Depending on what the market does, you're going to get whipsawed around a little bit. But the idea is you believe this thing's going to eventually turn and run, and we're going to have some power behind it, and it's going to return back to the blue light. So that's going to build your pyramid without actually taking it in the shorts too badly. Okay, so now we're short 1 again. So now this time we're going to build our pyramid. We had 2 going long. This time we want to go 3. So we're going to put in 5. So if we do this and trail 1 price bar back, or you can trail it on the ATR, you can go in with 5 on the ATR, either one. See, I got my OCO set up, so one of them will trail for entry on the price bar back, and the other one trails for entry on the ATR, and I can choose whichever I want, depending on what the market's doing for me at the time. Let me show you. I'll bring those up for you so you can see them. This is 1, strategy 1 right there. So there's my settings. Go ahead, grab your little phones. Take your picture. 1001, 1002, 1003, 1004, 1005, 1006, 1007, 1008, 1009, 1010. Gone. Next one. 1. Here you go. 1001, 1002, 1003, 1004, 1005. Gone. All right. There you go. If you didn't catch it, you can go back and watch the video. Now, we obviously don't want to be trailing with 10 because hit that delete. We only want to trail with 5 because we went long with 1, we went long with 2, and we go long with 3, because the further it goes back against us, the more likely it is to go the other direction, right? So you're bullish on the market, you think it's going to go up, you think it's going back to that blue line, you can just keep building a larger position in the opposite direction. But if it's going to turn and fall, heck, make money on the way down instead of build a pyramid on the way down. Do it that way. Build your pyramid that way. I thought about that last night for you, Bruce, and thought that might be a fun way to trade this, and maybe we'll try and trade this a little bit more often like this, because I think this is a neat concept. I've not done this before. You know me, usually I just don't try and pick a direction, and I just build my position whichever way it wants to go. But to have a bias to one side keeps us, keeps us going, making money if the market's going in the opposite direction of what our bias is. So might as well be making money instead of losing money. Might as well make money instead of lose money. Guess that's a good idea. Of course, it's a good idea. All right, guys. I got a Sunday school lesson for you. All right? You ready for your Sunday school lesson? Here we go. Sunday school lesson. Plan your trade and trade your plan. Don't be a jack of all trades and a master of none. Specialize in one or possibly 2 types of trading strategies. Consider short-term day trades and maybe some long-term options. Cover both your bases. Do what works for you, but become an expert. Become an expert in one thing. Just be really good at something. The problem with trading is there's so many things that you can do. I mean, you can go and, my goodness sakes, for as many YouTube channels as there are, there's different ways to trade these markets. I mean, it doesn't matter how many YouTube channels you go out there and watch. There's going to be somebody who's going to teach you a different way to do it. And that's okay. Nothing wrong with that. But what I'm saying is pick something that works for you and just become really super good at it. And so I have to give Bruce good pats on the back, because that's what he's done. He's like, I want to do this one thing. I want to just really kind of perfect it. I want to really this is how I want to trade. And I want to work on it, and I'm just going to do this one thing. I just want to make it good. So he's trying to be, an expert in one area. Now, that's what I would suggest, which is why you oftentimes will see me. Most of the trades I take are continuation formations. That's where I've had my most success. That's where I've had the most luck. These reversal strategies, I've had good luck doing reversals. You can get your hiney handed to you with anything you do. I mean, nothing's guaranteed, but the continuation formations seem to work best for me. Chop, 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 rally. That's what I like to see. I like to see rally, chop, 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 rally. First rally, usually the small one, chop, 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 big rally, second one. So it's the pop rally and then the run rally. All right. So that's what I like to see. Chop, 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 chop. If you get chop, chop, chop. But that's one strategy I really like. The other strategy, of course, is rally, 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 little two pull back, ABCD land, ABCD, and then boom, 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 watch it take off again. So those markets have to be a little bit more parabolic, and those are, make money fast, and that's what I like. But just those are just like two things that I really like to do, two or three things in my strategy. Okay, here we go. So now we're long 4, Bruce. It's kind of like you built your big position without actually building your big position. Now the market doesn't have to go back 50% of your move or 75% of your move just to get you back to break even. At this point, you're long your 4 positions, but you're long your 4 positions right here. So now we're going to go 5 and trail with 5. And what's that going to do? It'll take out our 4 and put us in short with 1. Okay. So that's kind of this strategy. So the name of the game is just become really good at one thing. And those are the few things that I've tried to become really good at and try. And, we're doing this down here on a 1-minute chart. You can do it on a 2-minute chart, which has a little bit better trending, shows the trends a little bit, but it's not quite so choppy. Or you can go down to that range bar 6. I don't want to do the range bar 6 right out of the gate on the morning bell because it's oftentimes too quick, too fast, too hard to trade. Slow it down a little bit. Maybe go up to a range bar 8 or range bar 12 or something for the morning bell. But you got to, kind of figure out what works for you and decide if this is how you want to do it. So now we got our long 4, Bruce. And if we get stopped out again, now we're short 1 again. So now this time we want to go long. We'll put in 7, which would put us long 6, right? So we're going to trail. We go 1 price bar back and we'll trail. Now we'll build this is how we're going to build our pyramid without actually getting our hiney handed to us. Okay. All right. I don't know. I'd like you to try that for the next week. See if that works for you. You guys try it too. I want to hear if you guys like this strategy and if that works for you and become an expert at one thing. I like to also do, take my money out of this account and put it over in the stock market. Once I make some money here, take it out, put it in the stock market, trade a little bit less aggressively. This is a high octane market, it's got high leverage. So I like to take it out of here and go put it in the stock market where there's not all the leverage. And I can put it into an IRA over there if I want to, put it in my retirement account. I can use it, just put it in my normal trading account. I can put it in my girlfriend's account. I can take the money out of here, put it over there and invest it over there. Whereas over here, this is really more trading. This is trading. So this is an income source. That's an investment source. That's how I do it. And that's why I bring up that little thing and say, kind of pick what are yours you're good at and just do that. And that's the way to trade, in my opinion. All right, guys, if you like this class and you thought this was helpful, go ahead and hit that little recommend. I know there's a whole bunch of people in here watching who are not members, have not subscribed. Subscribe. It's not painful. It doesn't hurt you. Makes me happy. I like to see subscribers added to the books. And then if you guys thought this was good, give me those little thumbs up. It's always fun to see that. And if you have any comments or questions, you can always email me at asklan@gmail.com, but I probably won't see it. I mean, you can try, but it's better just to go put your comment in the YouTube thing. 6, 7. Now we got to go. So now we build our pyramid to 6 and we're trying to go long with 6, Bruce, in this case, in this example. So now we got a trailing with 7. So we just got stopped out on our single. Now we build our pyramid to 6. So that's the idea. I thought that was a pretty cool thought I had. This market's dead. Doesn't want to play. Doesn't want to play to the long side anyway. Doesn't really want to play to the short side either. It's trying to go down to that blue line, isn't it? It's trying to get down to the VWAP. So if you like this class, give me the thumbs up. Did I finish my story? I think I did. Ken Roberts story. Oh, the first time I ever taught was to a group of Ken Roberts students. I'd been working with a guy named Scott Berry, and he got me into the futures market. And then he got me he worked at a brokerage firm that was Ken Roberts' brokerage firm. And then they brought me in to teach to that group of people. So I taught the Ken Roberts people, and I did that a bunch. Went and taught live seminars. That was before the days when we could do seminars over the internet. So we taught a lot of live seminars. We did live seminars all over the place. We had shows down in Vegas and everywhere else with all the Ken Roberts people. And I would teach the Ken Roberts people. And that's how I got started teaching and trading. And then that's what brought me back to Chicago. Scott Berry got me back to Chicago for the first time. He's the one who took me back there. Part of that brokerage firm for Ken Roberts. All right. Watch this market go to the moon with 6 contracts now, Bruce, because you've built your big old pyramid. Be rich, rich, rich beyond your wildest dreams. All right, guys. Hope you had fun. We will see you tomorrow. Bright and early. Stock market day.